Hi, everybody. This is July 17, 2025, and we are here with the Power Law team, mainly me, and then the Minotaur team, and we are going to discuss the price action of Bitcoin. We have a very nice uh, development, right, basically the last week, kind of along the line of what we mentioned in the previous episodes. It's almost actually uh, eerie because Marcus was pointing out possible action in the 120, 123 range, and that's exactly what happened. So let's go a little bit more in the details. We always start with the power law graph. I showed usually different type of graphs. So I want to focus on this. It's very interesting. Um, it shows basically all the main information. Um, this is the power law trend. Is a red curve. We have a gray line here that is a support. Is one of the things that we use to determine how to set up our algorithm that we will discuss at the end of the episode. I made actually two kind of version of this algo. One is the linear one, and the other one that I just show you is a log. The log in the y-axis is unfortunately TradingView doesn't have a way of calculating the log of the x-axis. Otherwise, we could see the linear chart, the log linear chart, and the log log chart. But it's okay. The beauty of showing it in this way, right? So first of all, you can see this is the power law because there is still a lot of confusion about this, right? Uh, because everybody's used to see the curve like this, doing this kind of. It's almost like it has the back up, right? So it looks almost like it's kind of slowing down. But slowing down, it's an artifact. Basically, it's anything that is an exponential will look like straight in the log linear chart. So something that is not exponential, like the power law, looks like it's slowing down. So it's basically slowing down relatively to an equivalent exponential process. But it's going up very quickly. You can see it's actually this red curve, the power law, when you plot it in a linear chart where you have linear price and linear time, it looks like this. It's basically like a parabola, right? Everybody is familiar with a parabola, but this is a super parabola because parabola usually means the power of two, right? The exponent is two. This is an exponent of six. Just to give you an idea, right? You double the price, that means 2 to the 6 is 65, right? That is crazy. You triple the price, that is 720. Sorry, the price, you triple the time, right? The time that Bitcoin existed, if you go from 16 to 32 years, then you get 65 more in price, 65 pair. So it's incredible, right? Um, it goes really, really fast. It's slowing down because every year the change that you get is smaller than before, right? If you were starting here, you will see changes of 10, the first few years. Now we're expecting more like 45%. But anyway, so this is this graph here, this line here. It's not a power law. So this is a power law. This is a power law. This is not. This is a power law plus an exponential because it's trying to describe how these peaks. It's not very clear here, but you see how small the first bubbles were. You could not even. It's even difficult to see them, right? In this chart, they are there. But this orange curve touches all the peaks, even the first ones. We're like minuscule. It's ridiculous to see this chart in this way. It's Bitcoin has grown by an enormous amount. Um, but it's interesting because you can see, for example, the projected peak is all the way there. Because again, we projected in such a way that basically we are touching this orange line. It's supposed to touch this orange line. It's about the power law by the end of the year is supposed to go around 130. the peak, the projected peak based on this decay in the past is supposed to go all the way to 200K. And it kind of, it looks quite challenging, right? Once you plot it in this way. But, Bitcoin has done similar moves, even stronger in the past. So it's not impossible, Um, right now, we are leaving finally the power law because we were costing along the power law for a long, long time. And finally, we are still starting to see this challenge, right, to the power law because every bubble is basically a challenge. The challenge is lost every time when we reach the peak and then Bitcoin corrects itself, right? It wants to go back to the power law. So now, if we see it in this way, it looks more organized, right? Right now, I'm taking the log, and the log, first of all, it creates you see now this curve that looked like a J before, it looks bent, right? Um, but it's the same J, it's the same curve. It's just that now, if you go in a graph where we take the log of a price and the log of a time, it looks like a straight line. So this is a different way of showing the same thing. Now, one thing that is really interesting, I'm also showing here the moving average over 4 years. So the price looks very complicated either at these peaks, etc. If you show just all the data day by day, but if you're averaging, basically you're taking a moving average, maybe means you're looking back 4 years. We're choosing 4 years because this is the usual duration of a cycle. You're looking back 4 years, so every point represents the mean, the average of the last 4 years, last 4 years. If you do that, the price becomes much smoother. You see, it still has a little bit. It doesn't cancel completely the bubbles, but you can see the bubbles are much more smoother, right? Much smoother. And notice what happened if I then try to fit it with a power law and get almost the support power law. So the support, another way of understanding the support power law is what you get if you fit the 4 years moving average. But again, points to the regularity of Bitcoin. That this power law is really structurally describing what is going on over the long term, right? It's basically exactly what Bitcoin does over the long term. It will not be able to do all these things at different time scales if it was not the true behavior. So this time scale is 1 day, and this time scale is 4 years, right? And they are parallel to each other. Basically, it's the same power law. It's just shifted a little bit lower, but the slope is the same. So the way it grows is the same. That means it's really truly what Bitcoin does. There is no way of denying it. People deny it, don't understand math, literally. And then now you see how impressive the orange curve is because you see how it touches literally every single bubble. And we did it in this way. Basically, we calculated the difference between the price and the power law because the power law gives us a reference. And then you see very clearly there is a decay, an exponential decay of these peaks. You calculated what is the rate of a decay, then you include it in the model. So basically, it's a power law plus an exponential decay. You see now you're getting a curve that is not parallel to the red curve, right? You see how the spacing is much higher here and much smaller here, right? It's basically going down. Now, it's set up in such a way that you will never cross the red curve. It's going to approximate the curve, but never touch it. This shows that basically we're expecting less and less volatility in the in this area that we call the turbulent flow. So this is the core power law where when we are in the green region, when we are in the red region, we call it the turbulent flow of power law because it looks like turbulence. It looks like Bitcoin becomes much more unpredictable, large deviations and things like that. So right now we are in this turbulent area. It's red. We're moving up. Um, it's different from other bull runs. I calculated that if we follow even just this prediction that already includes some kind of decay, we should be around 130, and we are instead 120. We are moving there, but maybe we are catching up, but we should have been much more along this progression towards the peak if this cycle was similar to the other ones. It's there are anomalies like this correction here, right? Never happened before. During a bull run, we usually stay above a red line. We never cross it down. So there are a few anomalies, and I don't know what they are due to. Maybe the ETFs. Maybe we push the price too early up when it was not supposed to be there. Then the price needed to correct itself. So, but this is what it is. So it's very strong, very healthy. I would not say, now we're going to see the liquidity. Even if we look at the global liquidity continues to go up. I have a graph of that. Maybe we can watch them at the end of the show. But they point towards several months of going up. Right? I already demonstrated scientifically the correlation with the global liquidity is not by chance, it's there, and there is a delay about 80 days, something like that, and it's real. It's not one to one, but the liquidity is going up, the global liquidity is going up, the price is going up. We are going to have this continuation for a few more months. We are going to see what happens as we approach the peak. If we, first of all, where we are, and then if we are having a correction down, right? Some people are betting that we don't have a huge peak. Other people are betting that we are not having a correction. I'm skeptical because I think cycles are important in all human phenomena. Maybe they are a little bit more repressed, but they should still be there. But anyway, I'll leave to Marcos to describe what happens in terms of the local liquidity.
All right, yeah. The community's already given it to me. they remember they remember what I said last week. But hey, I'm the biggest chicken in town. I run. Chickens live. They survive. Sometimes the predators are not too smart. So hey, if the market tells me to run, I run. If it tells me to hide, I hide. I survive. All right. Let me share my screen. All right. So what I wanted to highlight here, when Giovanni loads it up.
Yep.
Here we go. So we're just going to start off with a very basic, fundamental chart from TradingView. Nothing exciting here. We're looking at weekly candles. And the reason this is important is because when the market tells us to run or change our opinions of things, we do it in an unbiased fashion and we accept what the market tells us to do. We adjust. The last thing you want to do is be a kamikaze investor or trader where you're so biased that you cannot change as the market conditions change. So what we have been watching here on these weekly candles is on Sunday night when we were in our last meeting, we were somewhere in this area here. So we were at that point where the market could come for the liquidity that was below, or it could take the liquidity above, and we know there's a ton of it there. So we had to wait until that played out. We had a scenario A, scenario B. Okay, on Sunday night, we got a confirmation on this weekly candle that it closed. Weekly candles are very, very powerful. You can identify the entire bull run off of a weekly candle. So when we got this confirmation, we had to change our perspective on the market because we went from a range bound market that we had been in for 8 months, 256 days. We went from a range bound market to a price discovery displacement market. And in terms of liquidity, the market is displacing or liquidating. That's a very nice way to say liquidating the short liquidity. All right. So just to give you some historical reference here, when we look at the 94 breakout, same thing, strong weekly candle. This was a fake out candle. We had a few fake out candles here, but when the market makes its move, it makes its move. That's no doubt about it. That candle is strong. And so what happened after that candle? We went into price discovery. So I'll just remove this volume profile so you can see it. So after that candle, I mean, we just went basically on a tear. We just mitigated and liquidated all that liquidity there. Well, guess what? Look at what we're doing now. Similar situation. We got that strong confirmation candle that we're moving into discovery and displacement. So let's take a look at that now with the liquidity. So just wanted to use that for reference. When we got that confirmation Sunday, hey, all bets are off. Change, pack your bags, get your travel, get your boarding passes ready because we're moving. There's nothing we can do about it but accept it and make the money that the market's going to give us. All right, so when we put the liquidity in here, we can see even clearer. So I'm going to put it all in here. So we have gotten to what we call level one. We took out this massive amount of shorts, and there's our level two, and then we have level three of this gigantic liquidity pool here of that's a composition of 3x, 5x, 10x, and 25x. It's like everybody and their mother in this pool here. And it's going to, so now that we're in this phase here, uh, we have that profile level here. I would not be what typically happens when we're in displacement, when we're liquidating or displacing liquidity, we don't play around. It anytime before that, like here, 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 you get these sweeps where the market is just kind of sweeping the highs, taking out the stop losses, just nibbling around, playing around with it. But when it decides to go like it's now, it doesn't play. So just to give you a point of reference of that, we'll go to the previous breakout. And that's the beauty of markets. They're fractal, the same operations you can see at all time frames. It's the same action because they're computer programs that run this at the highest volume levels. So right here in 2024, same thing. We had a number of sweeps that kind of started to get us looking in that direction. And then after that, we got into the displacement mode. We took out that level one. There's level two and level three. So when this one here didn't even consolidate long. It did a little bit here after level one, which makes sense. You take out billions of liquidity. You're going to, but after that, it just ran. So we're in that phase now. And how do we identify displacement potential? Is when we look at the composition and the density of the liquidity. It's time to harvest right here. It's time. You can see it. This one was 9 months. The one that we're in is just slightly getting into 8 months. So it's very, very predictable when you think of it like that. Big picture, same thing. It starts, it gets more dense, and then it gets harvested. And it repeats the process. One thing I wanted to isolate because I'm going to eat my own words here because I'm impartial. I don't care. I'm going to pack my bags and I'm going to join whatever team is winning. I don't care. I'm a bull, I'm a bear, I'm everything. But ultimately, I'm a bull and I want the market to go up, but I'll adjust to whatever the market's giving me. So right here, we go back to last week. We were identifying because I can see some of the members kind of hitting me right now about it. Right here, we were consolidating the big institutional players that can move the market. They had some massive orders that were suppressing this market right here. So I would assume I'm not in their boardrooms. I would assume they were trying to determine their next move, which way they want to go with it. And I was reading. I don't read into the action here. This is just casino action. Is it going to go up? Is it going to go down? I don't look at that. I look at the motion of what's actually taking place. They were displacing the long side liquidity. We had 1, 2 displacements, and they were not tapping into the shorts. So that was giving me my indication that they were going to go for this first. That inventory there makes sense. And when you look at the last cycle that we had here, the impulse, we did something similar to that here. We take three. The market loves threes. One impulse, three. Then they took out all the 5x, and then it reversed and they stopped taking longs and they started taking shorts till they displaced. All right. So I was looking at that also here. That was giving me my read that I would say, based on that, let me back out that five. So based on that, one impulse, two impulse, then you come back down here and you take that third and then you go up. It was the perfect move. But the market decided to go in another direction. They did not come for this and they reversed and went that way first. That's fine. They'll settle that. They'll mitigate that liquidity later. I'll show you how that's going to be done. So what happened? The same thing happened here when they displace, like they did here, picked up a lot of short side inventory, and they just move it over here and settle it over here. That's what they did. So once it comes over, they dump it on the other side. So let's take a look at. Someone was saying, well, how far do we go now? And do I think we're coming back to 96? So let's take a look here. Uh, I'm just going to put this little small range here. I like to pull it from where the liquidation start, and I'd pull a fixed range to kind of see where we are now. So that's the 96. Do I think we're coming back there? Anything's possible, but here's the point. When we had that strong bullish move, when we broke out, now we have a lot of support here at this level, and then this level here. There's a lot of what's called demand zones in here. So at best, I'm looking at maybe that type of pullback. But as far as coming back down here, these pools will probably be revisited in the bear market phase. We're gone. We're in another zip code now because we're displacing. The market doesn't play around when it's displacing. So at probably,
And you were saying this last time. You were
yeah,
saying that
yeah,
if we did have a move up, then
yeah, it's
it's
yeah,
basically a resetting of a
yes,
situation, and then you have different
yes,
type of retracements,
yes,
basically to that red area.
right.
Um, yeah,
Yeah, we're displacing now. And when we displace, it doesn't play around. You would be a crazy man to have any shorts going right now or anything like that. It's displacing. What typically happens in a displacement phase, the pullbacks are very shallow, very quick. Typical indications where you say, hey, RSI is overextended. I'm looking for a major correction. It just doesn't happen. It's very abbreviated. It's very short. It snaps back very fast, very fierce. So what typically happens here, this will put people to sleep a little bit, and boom, it's just going to move. It's in that phase. It's not going to play. So the good news is there's a lot of good money to be made here if you're on the right side of this. Just about any bullish strategy you want to put on here can work. I wouldn't chase these big moves, but I would wait for some type of pullback, and then I would be getting on. This is a good area here for that. Um, let's look a little bit further ahead here. All right, so what type of potential are we talking about here? What typically happens in a strong bull market like we have right now, in a breakout displacement type of environment, you're going to it liquidates all the liquidity. 3x, everybody's gone. So the 3x takes us to right here. That's like 140, and then it has to find a new zone, right? That's what price discovery is. It has to discover a new range, acceptable range. So the way we do that is we look at the previous range. We went up 20% to the top of the range. That's about 175. We'll call it 175. So I'm going to move this up to 175, which is right here. So that's the top. And I'm just going to kind of draw out, animate how this particularly kind of happens. It reaches the top. Then we have a correction back to the bottom of the range. Then we go re-range, we get range bound. And then we might come back to these prior levels here, right here. So let's put some meat on the bones here. So you have a volume profile running here like this. Then the new liquidity will start growing in slowly. There'll be liquidity on the long side also coming in down here. And then that's kind of how this works. Um, one quick thing here. One So now let's go review this same activity in the prior breakout. So over here we did the same thing. We broke out, we took out all the 3x right here. Then we went 20% higher to a new range, which created a new volume profile here. And then we started to range in that same range. And then we started liquidating the long side because we have to offset that inventory. It takes that's a couple of months to get over there, right? So we will know when it starts to range and it gets into discovery mode is complete. We'll know right here. This is the tip right there. There's a line right here. Well, it moved on me. Sorry about that. There's a line right here, right? So this lets us know that we're gonna get range bound again. What I'm looking for is this area right here. This is 3x, 5x, 10x, 10x, 5x, 3x. And when those areas get aligned, you can see this line here that I made. I'm going to move it over just a little bit more. When we can start to see all of those levels coming in, then we know that we are getting back into a new range. And there's a way our algorithms actually trade this extremely well in these ranges like this, but we're going to discover until we get to that range. And you'll know when the discovery is over, when these liquidities start to set. But you have to be a little bit patient because right here, it wasn't set yet. It wasn't set yet here. Took a little bit of while before it was able to build all three levels. That's the secret to it. Then you know it's starting a new phase to create new liquidity to be harvested later. That's how we know. And that's what we're waiting on. So let's get a timeline on that. We'll measure this out here. What is this? So about 35 days, a month and a half should be enough. So we're probably looking at a nice good rip here for a good 40 days, 30, 45 days. And then we'll start getting into the discovery. And to come back to Giovanni's power law here. So we know the top of the range is 175. So let's get to the top of the liquidity pool, which might get tapped or swept. So you could add another 10% maybe. I don't want to get too aggressive, just half of that because it's going to sweep into that a little bit. So we'll come back over here. So we're already at what, 175. So put 10% on there. And who knows it, who knows if this thing gets in some kind of banana zone, it can wick, an extra 20% and no problem or more, So right there, that's your 200 right there. And then the top of the pool itself goes way past 220, 215. However, remember the bull market, we're just not going to keep taking out short pools forever. At some point, we're going to reverse. And then when we start reversing into the longs, we're going to start leaving that short liquidity behind. And then we start taking out the longs for a long time. And that's how you enter into a bear market until we come back around again. So let's have some fun. The party's going to last for a good 40 days before mom comes home.
Yeah, it's
So
good.
crank crank the music, break out the
Yes.
break out the kegs, and let's go. Let's
But
have
to be honest, I like when there are these retracement, because the algo loves our trading algo loves this, because it makes
yeah,
money both ways, right?
yeah,
Because it has both momentum, and Sebastian will explain this, but we have
yeah. Like right
momentum.
here, right here, this allows the algo to reset and get ready for the
Yeah,
next move. But yeah, these
exactly.
these range bounds is where you actually make the most money with the algo. The
Yeah,
good
this
new,
when I love it.
the good
Yeah,
news is
but
range bound is 80% of the time. 70, eighty
yeah,
percent. So yeah,
exactly,
yeah,
exactly, exactly.
Yeah, the
Yeah,
bad news for people using other algos is that they only work when the market goes up, whereas we've got
yeah,
something that shines when the market goes down. So that's the key advantage.
exactly.
hmm,
So that's the
yeah,
game, boys and girls. Have fun. Go play. Party's here. Party's on. Game on.
good. All right, and next we have Sebastian, so that actually will go a little bit deeper in how the algo works. It's interesting because even for the people that don't want to use the algo, it's still useful because um, you give us some idea about price action. How Bitcoin moves, the typical moves of Bitcoin. People can use this information for options. Because uh, I personally I want to see more people using Bitcoin volatility. Then how you do it, I don't even care so much, because we are offering a tool. If people like this tool, is great, right? We're not, we care about people, of course, using this product, but in the end, we want to see the Bitcoin community being successful. So, use this information as you like. And so even looking at what the bot, how the bot made some decisions, it's interesting per se, but also it gives us a chance to discuss a powerful tool that I think is going to help a lot of people. So, Sebastian, you want to go ahead and
Yes.
show some of these what the bot did recently?
Thanks, Giovanni. Just let me know when you can see my screen.
Yeah. Okay.
Cool.
You're ready.
Okay, thank you, Giovanni, and welcome anyone that is essentially new to the show or not a Minotaur customer right now. So before I get into the dynamics of how the algorithm works, I think it's important for me to clarify each week on this show its capabilities and what it can actually do, because that's very important. So the algorithm is built to trade Bitcoin specifically, and it's also built using the fundamentals of the power law support in mind and the way we manage risk and the way we use the algorithm. Now, with this algorithm, you can do a number of different things and you can use it in a number of different ways. So it does have the ability and capability to go both long and short. And you want to think about it like a Swiss Army knife that you can kind of customize to however you want. Now, the key here is that you can do two fundamental things with this algorithm. You can use it to gain profits on Bitcoin's volatility, regardless of whether you're someone who holds and loves Bitcoin or someone who simply trades Bitcoin to gain USDT or USDC. So the first thing you can do with this algorithm is simply apply it to a standard USDT M futures perpetual market. And what you can do is you can use it to trade Bitcoin and then generate profits in USDT. So that's the first way you can use it. The second way you can use it, more for Bitcoin maxis or for Bitcoin hodlers who don't want to sell their bags, is you can collateralize your Bitcoin and you can use the algorithm with it to then use your Bitcoin to generate USDT profits, which is very, very valuable for a number of reasons. Obviously, the key highlight being that the cycle theory is still in play. And when Bitcoin goes into bear cycles or bear markets, in those periods, we're essentially in a long period of downturns, right? And when that's happening, in essence, your Bitcoin is sitting there doing nothing. Now, if you want to hodl, that's fine because you know eventually there's going to be a period where it's going to go back into profit and then it's going to continue. But bear markets last a long time, and Bitcoin's market structure, when it goes up, it doesn't happen for extremely long periods of time. So this can give you the ability to generate USDT profits when the market is down and when the market is in bearish conditions, which is very, very unique, right? It's a very unique thing to be able to not only gain yield on your Bitcoin at all, like let's remember that gaining yield on your Bitcoin is not something many people can do. Or if you can do it, it's through ways that may earn you 1% a year in interest. It's not worth your time. But with this, not only can you gain yield, you can gain yield when the market is moving against you in a bear market. So that is really, really valuable. And for anyone that wants to understand further how that works, we do it in a very controlled way with risk management at the forefront of everything that we do and every decision we make. So we're not, risking our Bitcoin in massive amounts of ways. Of course, there's always risks involved in doing this, right? There's counterparty risk, but it's a risk doing any type of trading. So, with that in mind, we do it in one of the smartest and most intelligent ways. Now, I'm going to show you this on a 15-minute chart today, and then we can move down to the 5 so you can get an understanding that our algorithm can really run on any time frame. Optimally, we prefer to run it on the 15, but you can run it on the 5, you can run it on the 1 hour, on the 4 hour. It has the ability to operate on any time frame. Now, to get a good understanding of what's happening here, I'm using a free indicator on TradingView. It's not as good as the trading different liquidation heat map Marcus was using, but for a free TradingView indicator, it's very good. And it shows you open interest and liquidity in the market. So you can get a little bit of a better idea of watching the candles play into these liquidity zones. And what the algorithm is going to do when the market is moving up, it's very simple. It's going to enter a position, and depending on how you run the take profit, it's either going to take profit very quickly if you want to scalp, or if you give it breathing room, it has the ability to capture larger moves. So as we can see, the market moved up, we closed our position, and then the algorithm waits for its next opportunity. As you can see, market moves up a little bit more. We take our next position here. Very, very good entry, as you can see, because the next move is a big one. Bitcoin rips, let's say, around 3.5%, we close our position. Now, this is an important thing to understand here. And I'm going to keep showing this every week because this is really the critical edge in what our algorithm does. As you can see, we have a bit more buying pressure, but then what happens? We hit the top of the range and the market sells off, right? Pretty quickly. Now, this happened just the other day. We hit 122 and then we had a big sell off with a lot of selling pressure. Now, in just this move alone, I'm not sure the exact number. Next week, I'll make sure I have it with me. But even when Bitcoin moves 5% in one direction, and Marcus can attest to this, the amount of liquidations is gigantic. And this is what most people don't realize. It's already such a volatile market. And where retail traders and futures traders go wrong is they don't use leverage in the right way. Now, they use leverage to amplify their risk rather than using leverage as a tool for margin efficiency, which is what this algorithm does. So they're two different things. We use leverage not as a way to amplify our risk, but to allow us to use less capital to trade more frequently, which is a very unique way of using leverage. Now, what you're going to notice on this big 5% move to the downside, a lot of people got liquidated. You'll notice our algorithm is not opening positions on this range. And this is very important because when you're using, there's a lot of free bots out there and free algos out there on KuCoin and all these other exchanges, and they'll give you like a free DCA bot. But the problem with that is because it doesn't have intelligence, it's going to look to buy at the wrong time. And one thing I can tell you when it comes from running algorithms is that actually the entry is almost everything, and the entry execution is the key. So as you'll notice, the algorithm was very, very patient to not hop back in the market because it knew that the selling pressure would continue. And we waited until about here, and then we started entering positions, right? Started buying, started buying. And we made our last position here. What you're going to notice next is, once again, we always cost average into the move before it happens, right? So this is not predictive. This is not us using a crystal ball. It's actually more just about market positioning. As you can see, we were positioned here long before the move happened. And if you notice here, it's not just good at entering positions, it's extremely good at exiting. And look at the exit here, right? The market runs up, we take our profit, literally at the top of the wick, right? Now the market falls, and now we're coming back up, and it will look to probably make another entry soon when the time is right. But this is the key to everything. Understanding that there is maths that goes into the algorithm, but also there is its own inherent intelligence, which we developed, which has the ability to understand where to make entries and where to make exits. Now, if we come to a 5-minute time frame, as we can see, this one is still in an open active trade, right? So the 15, as you could see, due to having a higher time frame, it did have the ability to get better entries, but this doesn't mean the 5-minute is not worth running because as you can see, we're trading cyclically here and making very, very good moves. So it's important to understand that no matter what time frame you're using, the market has similar patterns. As Marcus says, the market is fractal, right? So what this means is that even on the 5-minute time frame, there's moves and cycles and trades that are happening within that time frame, just as there is on the 15 and just as there is on the 4-hour. So it's important to understand how robust this is, and you can essentially trade really any way you want to, but it's also about understanding that you need something that has the ability to trade up and the ability to trade down. Now, if I go back to the 15, I want to explain to everyone why downwards pressure and why bearish conditions are actually better for our algorithm. And it's very simple. Since we use margin efficiency, and since our goal is to get a good entry and to use capital the right way, we will never put large positions on the market with our total portfolio. That doesn't make sense. And that's where most people go wrong. Rather than using all of our capital, we disperse it in small increments. Now, when the market's going up, we're still going to be profitable, but because the market's increasing, we only use a little bit of weight on our positions because when you build the algorithm like that, yes, you're sacrificing for the upside, but you're sacrificing so you can gain on the downside. And this is something very important to understand. There's no algorithm in the world that is perfect and that can make perfect money going up, perfect money going down, perfect money going sideways, right? That does not exist. And that's not what this is. This algorithm has flaws. It's not perfect, right? But what it does extremely well is trade going down and guarantee you profit going up. Now, for us as a business and in a company, we put the focus on being able to make money when the rest of the market can't, right? So when the market is falling, that is where the bulk of the gains happen because we take more positions when the market is falling. And that inherently falls into Bitcoin's natural structure and natural cycle. You want to be buying it when it's going down. You don't want to be buying it when it's going up. And that's a key principle for what this algorithm deploys. So that's the easiest way to explain it. You're going to gain more on the way down because we're layering more capital in. In essence, that's what our algorithm does. If anyone wants to know more about how this works or wants to hop on a free call with our team, you don't have to buy the algo. You can hop on the call and just learn what you need to and go your separate ways. It's a completely free call. So please feel free to book a call with our team anytime. We'll go further into algorithm works and we'll explain all the risk management and all the risk structures around that as well. And that's it for today. Thanks, Giovanni.
Yeah, and like you see that there is the ticker downstairs, downstairs, down below the video. You can see there is you can organize a call, calling. Going to first of all watch our webinar because it's very nice. Actually, if you go there is an update. There are interviews with me. There is a presentation that I did in Las Vegas. It was very nice. It was a live presentation. We were there. In fact, yeah, if you are in Las Vegas next year, please come and visit us. We will have a booth and probably we'll do another presentation like this. But go and watch the video to learn more. There are many testimonials, and this is the website where you can go. You can see scrolling down in the video. Or you can always DM me if you follow me on X. DM me, talk to me. I will explain more things and give you some links that you can visit. Anyway, let's go and deal with some of these questions. Maybe this one. In the long run, fair price will be cycle max peak, and support price will be dip. And Bitcoin will go between these two trend lines. Am I right? Well, I don't know what you're referring. If you're referring to the decay channel, yeah. So the idea is that decay channel is going down, expressing the fact that these cycles are not going to be as crazy like they were in the beginning. In the beginning, we had times where we were 10 times away from where the power law was. It's extraordinary, actually, that we kept the power law, because if you have something that deviates by a factor of 10, you need to have a correction that goes down a factor of 10 too, right? So we had a huge big correction that were proportional to how much we went up, because it's almost like these bubbles cancel each other, and they are becoming smaller and smaller with time. And right now, we are even questioning if we go to 200k. So that decaying channel is going to be kind of like a boundary almost. We have a boundary at the bottom where we never violated. That boundary is to be taken seriously because it's really something fundamental. It probably has to do with the cost of production of Bitcoin. Now, I will not put so much faith on the upper boundary. It's possible that we go a little bit higher, a little bit lower. It's kind of give us an idea of what to expect. But yeah, the volatility will continue of a bubble will continue to diminish, right? The beauty of Bitcoin, though, that it continues to have this incredible volatility, right, day by day. That is basically what we are using here, So we don't need to have these huge big peaks. We don't need to have these, because that was one of the ways that people could have multiply their Bitcoin. And if you look actually at the data, it seems counterintuitive, but a lot of the early investors tend to sell at the top. In fact, it's one of the reasons why we have a crash in the first place. And then they rebuy at the bottom. And these are one of the things that savvy Bitcoiners did in the past to actually get even more Bitcoins. But now we don't need that anymore. We don't need these big swings. Now, if you have, it's great, right? Because we can still use it. But the system doesn't need to have that. It just needs to have enough of this up and down that Marcos is describing. But you will not have a market if you didn't have that, right, Marcos?
That's
The
right.
market will not exist if you didn't have these swings to grab liquidity and then going up, and the market does that a lot, and Bitcoin does it better than other assets. It does it more aggressively, and that it will continue for many years. So it's important that we use this. Bitcoin is kind of a best of both worlds. It has this beautiful long-term trajectory that we can count on, and then it has also these fluctuations. And that is the foundation of our algorithm, because the worst that can happen with the algorithm is that you are staying in these open positions that Sebastian described for a relatively long time, because maybe there is a correction and we are now going up because we stayed up. It doesn't happen often, but that is the worst thing that can happen, because Bitcoin eventually always recover, right? Because we know the long-term trajectory is only up. It's that J that I show you there. So this is why it's so unique, and we don't do anything else. We don't trade anything else, only Bitcoin, because of all these beautiful characteristics. Anyway, so we can go to the next question. Do you want to say something, Marcus, on these, or guys, and anybody can add or
Yeah, just to add to what you were saying, that the power of this is so infinitely powerful, but we lose sight of the simple things that make it powerful. Like you said, the liquidity, the strength of the asset, Bitcoin's going up over the long term, and it gives us this daily volatility, or this energy that we're able to capitalize on consistently, and it doesn't stop. And the main thing is, if people would just be patient and load up, just like the institutions, they load up during those times where it seems like it's not doing much, and then bam, it makes this big moves consistently, and that's just going to continue to pay you out if you just just ride with the trend. It's a beautiful thing. Yeah.
Oh, yeah.
Yeah.
Did I show you guys these graphs? I had some beautiful graphs where I was showing that even with a little bit of yield, because this is a team that I want to. I know I'm not getting a lot of pushback recently from other influencers. I don't see anybody saying much against it, but it's something important to remember, to remind to people, right? Let me show you this graph, because it's a very cool graph. Here it is. Just a second. Even a little bit of yield
Goes a long ways.
goes a long
Long
ways.
ways.
And remember, this is a yield that you get if you because we mostly trade futures, right? Some people ask me, can you work on spot? Yes, it can work, but ideally it's better to use futures, because you get a little bit of leverage. But maybe
Leverage.
Sebastian and Marcus can elaborate. But here, look, I use 1.35 every month. So imagine you do something just a little bit, 1%, right? And our algorithm does better than this. But I try to use something conservative. So this is on top of Bitcoin. So you have your Bitcoin, and because of this trading, we using Bitcoin as a collateral, we get an additional 1.35. And I don't ask me why I use this number, but there is a reason. But 1.35, and you could, whatever gains you have in Bitcoin, you increase your position. You can do it every few months. You don't have to do it every month. But over time, you see what is the difference between having a system like ours and just rely on Bitcoin. Bitcoin is already amazing. Like in the next 10, 11 years, we will do something close to 20 times. Well, with Bitcoin, you're going to do 100 times. That means that basically, if you start with 5 Bitcoins, you will get 25 Bitcoins. I know it sounds crazy, right? But that is what happens. Like, I don't know if you guys know, but because everybody in America knows the Americanized story of Pinocchio. But in Pinocchio, there is a scene where these two, the fox and the cat, tell Pinocchio, because they know that he has these gold coins that, Mangiafuoco, right, the puppet master, gave him these coins, and he wants to bring it to the dead. And they tell Pinocchio there is this miraculous field that is called Il Campo dei Miracoli, the Field of Miracles, where you can go and put the coins, and the day after there will be a tree where all the coins get multiplied, right? You can harvest the tree with all the god coins. Of course, we want to Pinocchio to put the coins there so they can go at night and steal it, right? So it sounds too good to be true, but this is math. This is real, and if you are focused and you are disciplined, and this is a very achievable goal, right? To get a little bit of yield, and this is, I think, it should be the message to Bitcoiners. The odl story, it's kind of, I think, over in the sense that we are still hodling. We are not telling you to sell your Bitcoin, but we're saying now that there are all these instruments, all these tools, do something that is, of course, you will never gain anything if you didn't take a little bit of risk, right? What are the risks? Yeah, you're using an exchange. So, we know I lost 35 Bitcoins in an exchange several years ago when it was much more like Wild West. Now it's much more difficult that happens. It's still a risk. So don't do it with all your Bitcoin. Do it with a small percentage, right? Maybe 10% or something. But being a little bit more aggressive, being a little bit more creative with your investment, because the truth is this, right? You can see how these, because that is part of what we are trying to share with people. That you see how this CAGR goes down in time. That blue line, that is Bitcoin. That is, if we continue to follow the power law, and we follow it for 16 years, the percentage that you get from Bitcoin every year is going down. It's going from 45% where we are now, and is going down to about 20% in 10 years from now. Notice what happens if you get this little yield from a system like ours. It's almost like you're going back in time. You're getting the yield that you were getting 5 years ago, 6 years ago. In fact, actually, I could calculate how long in the past you will have to go to get the same results. And so it's a way of basically getting the type of returns that you were getting from Bitcoin several years ago. And now you can see it's a huge difference, right? And you can multiply your Bitcoin. So, this is a very important thing to consider, and something that more people should look at and trying to understand. It's a very powerful graph, right? What do you think, guys?
I agree.
Yeah, I always try to stress this, especially when I work with newer clients, because in the crypto space, especially, there is so much mania and so many people are trying to get rich as quick as possible. And what they don't understand is if they're just willing to play this game, a small additional increase every month, the compound, look at the power of it. I mean, look at the graph. It may not sound like a lot, but when that adds up over time, and it's such a key thing to understand, especially in this market. If you can be patient and allow things to take their course, you're going to do really well. Unfortunately, there's just so much hype and FOMO that, people try to do it the wrong way. But yeah, it's an
Yeah.
amazing graph because it
This
shows you the
why
power.
there are these shows that are super popular, right? Some of these degen show. They actually they make a point of calling themselves degen, right? And there is a space for that. Maybe if you are young, you are 14 years old, maybe it's attractive, because you're thinking you're having fun. But I don't think this is something that you want to have fun with. You want to be focused. You want to be, discipline, and look at the long term. If you are young and you have 10, 15, 20 years ahead of you, 20 years are going to pass like nothing. But
Yeah,
the difference between these degen people and you will be that you will be winning. Now, among maybe a million of this degen, there is one that is going to show his Lamborghini, etc. But
yeah,
one,
yeah,
it's like winning the lottery. It's like winning the
yeah.
lottery.
It is. It
Then they
is.
see only the one that won the lottery, and they think I can do the same. You cannot do the same. One person in a million can do that because of luck, or they did it's luck, mostly luck, right? Maybe there are some people that are also skillful, but it's really, really small minority. This is something that everybody can do if you are focused and you are focusing on. This is why I use 1.35. I didn't use 3. I didn't use 5%. I use something that is substantial, but it's small. That is achievable. It's a It's a real goal. You can actually do it, you know. And this changes completely the picture, right? We are not trying to tell you, oh, look at this, it's a quick it's a scheme to become quickly rich, etc., right? Always run whenever you hear people saying this bullshit. This is something that, okay, it requires focus from you, it requires some decisions, it requires maybe some sacrifices, but it's achievable. It's achievable.
Yes.
And
Yes. That's such a good point.
100 pair in 10 years, it changes your life.
Yeah.
It changes completely your life. You can retire. You don't have to worry anymore. About your finances. It's an amazing result. Anyway, we can go ahead and answer other questions.
There's another one. Yeah.
So we have this one. Go ahead, Marcus.
All right. It says, up to what level are shorts trapped? We know that 130 is pretty much a sure thing, but do we have trap shorts around 140, 150? It's actually a good question. Appreciate the question, why, and I love you too. So let's see here. Well, we have evidence to 130 to in that range because that is where the positions are currently. What tends to happen is the market starts to displace very quickly. You don't have a lot of time to initiate new 3x positions. They just don't have time to get the composition, the thickness, right? So what happens is the market will make some 25x when we get to the top up there around. I think we were projecting at 175 at the top of the range. It'll start to put in some lower, some higher level liquidity, 25, 50, 100, and it'll start to stick with that, and that'll check the price enough to the market won't stop until that 3x starts to build up. So right now we got 3x to 30 to 130, 135, and we'll get that 175 3x once we range out. We have to range out a little bit so it can start to stick. So we'll see it come in. The answer to your question is we'll see it come in at the top. It'll start to accumulate, and you'll just keep watching this show. Every week we'll be updating that. We'll see it.
Yeah,
Yep.
we are keeping you on the edge, so you have to come
Yeah.
and watch the show every week.
Gotta watch the show.
We do it on purpose. We had a talk with Bitcoin and say, hey, Bitcoin,
Hey,
don't tell everything, all at once.
we gotta
Let's
hit you
keep
with
it,
we gotta hit you with the cliffhanger.
yeah,
Tune in next week. You'll see.
exactly. And by the way, you get all these compliments,
Yeah.
Marcus. People love you.
Yeah.
They
Break it
say
down
it
like
is,
they like the way I break it down.
yeah, it is excellent. You are
Yeah.
doing an amazing job.
Well, I
Marcus.
appreciate it. I like you. I love you guys too. You make me motivate me.
All right,
All
and
right.
go ahead. Maybe this is a Sebastian question.
Yeah, I
Yeah.
can answer this question. Hi, Brill, how are you? So the question is, if you're trading futures and using the Bitcoin as collateral, are there ways to use the bot to stop potential liquidations from huge price drops? Now, yes, this is the key to everything we do, and it's the only reason we're able to run this business and why we have so many customers that are able to ride the volatility. Because one thing we know is guaranteed is Bitcoin's going to have big drops. Even though they're dwindling over time, the drops are becoming smaller and smaller. It's still going to happen. So yes, when we manage risk, the first thing we do as we're setting the system up for you is get a clear understanding of where the potential liquidation level is going to be. Now, important to understand that liquidation level and your reward are tied at the hip. So what I mean by this is obviously the higher your liquidation level is, the higher the return. So this is something that can never be changed. This is, they're married together. This is something that's always going to be like that. Doesn't matter what financial market you trade, right? So the key though is understanding and programming your levels in an intelligent way. So one of the things we do is we make sure liquidation levels are always very, very low and below power law support. You could have your liquidation level at 0, meaning your liquidation risk is nothing. But when you do that, your yield is going to be affected. So it's important to understand what you are actually looking to get as a client, as a customer, and where you're comfortable having the levels. What we always recommend is running them below power law support. And this is something you have total control over. So you can configure exactly where you want your risk to be, which is very, very unique. And yes, the answer is you could build a system to handle drops in price for Bitcoin going to $100 if you wanted to. It's just understanding that the safer you have it, the lower the reward is going to be. So we look to find a nice balance in between that can get you good yield and still have your Bitcoin holdings extremely safe. So hopefully that answers the question.
Yeah,
Fantastic.
and yeah, it does. And just to add to that, that's another reason why you put in the safety orders and the way you use the DCA part of it that allows it to go very, very steep price drops, right? It can handle and withstand tremendous drops in price where everybody's
Yes.
getting liquidated. You're just adding to your position. Yep.
Yeah, just to give you an example, right now, I have two different algos that are running, and neither of them has even a liquidation level. My liquidation level is like it doesn't even show up because it I have enough collateral. We do everything. That is our focus number one. We don't want you to lose your Bitcoin, right? It will not this will not make any sense if you are putting at risk your Bitcoin. Now, it will be a lie. We will be liars if we told you, oh, this is without any risk. Never listen anybody that tells you there is no risk in what you're doing. This is without risk. If it is without risk, then there is no gain. It cannot be. You have to have a balance. So now the entire game, and people, there are entire industries, right? They are working on this. It's not that it cannot be done. And Marcus has a lot of things on how this industry is run. It's run by bot. Now all this is done by bot. But the entire idea is to minimize your risk and enhance your gains, right? If you can do this in the right way, then in particular, if your goal is to do things like this, right, getting 2-3% a month, that is amazing. But we are not saying you're going to become a millionaire starting with zero point 0.1 Bitcoin the day after tomorrow. We will never say this. So this is not our style. Our style is to. I will never have work with these guys. You know me. I am all about science, about numbers, about data. But yeah, we are trying to focus on not losing your capital, right? That is your principle. That is the main goal. And then on top of that, if you take a little bit of risk, and it's a calculated risk, these goals that we are describing, if you have a patience of waiting few years, then they will be very rewarding over time.
Yeah, well said, Giovanni. The patience
Good.
is the key to playing this game. If you can have patience, you're going to win. If you don't have patience, you're going to lose.
Yep,
And
yep.
another key to the game is I see it a lot. We all see it because we work with a lot of clients with these algorithms is they lose sight of the power of small numbers. There's tremendous power in small numbers that you can get over and over and over again. The market will allow you to get smaller percentages. Remember, everything's relevant. If you've got billions of dollars, a small number is still big. But we're just speaking from an average investor. Small numbers add up. It's like if you were to go to your mailbox and there was a $20 bill, how many times would you go to your mail? I'd go every 5 minutes. It adds up. It adds up.
I
And
will
people,
camp there. I will camp there.
and I'll keep going. I'll go every. I do it all day. So my point is, the algorithm will give you that without having.
Send your kid.
Yeah, it'll give you that without having to take on an exorbitant amount of risk. It'll give you that consistent smaller money with low risk. That's the key. Yes, you can scale it up and turn up the heat where it's giving you a lot of money, but it might not give it to you like that for long. If you're willing to kind of scale down, keep your risk, like Giovanni's saying, stay extremely safe. Don't put your Bitcoin in harm's way. You can get those smaller, consistent, repetitive returns that just compound over time. It's a beautiful concept if you can get your mind there. Yep.
Yeah, and it's also descaling the portfolio as it
Yeah,
grows. This is what's
yeah,
so powerful, and
yeah.
this is what we encourage right now.
The
When you've
de-risk.
got $10,000, yeah, you need to take a little bit more risk because on
Yeah,
$10,000, 2% may not sound sexy, but when you have $10 million,
that's
2% is $200,000 a month. Let's remember that. So you can de-risk as the portfolio grows, and that's what it's about. It's about only using the risk and leverage to grow it to the point where you've got enough. And then, as Giovanni's doing, if you've got the collateral, you can make 2% a month, 3% a month without almost zero liquidation risk, which then it becomes very, very powerful. So, that's the key also.
Yeah.
exactly. Yep. Perfect. Who else? Yeah, just real quick, Brill just put up another statement here. He gets it. That's the whole point. This thing is an organic system, right? You have your Bitcoin, then you have the algorithm generating more Bitcoin or USDT that you can buy Bitcoin. So it kind of grows organically. And as it gets bigger, as Sebastian's saying, as your account gets bigger, the risk is going down and the buying power is going up. It's a beautiful concept when all of those pieces are coming together. Yes. It
Correct.
builds on top of itself. Yep. Snowballs.
Okay.
Yeah.
I think we did it again. We did it. I think we covered it all.
Yeah.
Talk about many interesting topics, and let's see what happens next with Bitcoin. It seems very exciting times, and we will be next week again.
Tune in next week. Yep. I guarantee it'll be
Okay.
something. Yeah.
Yes. Okay, guys.
All right.
See you
See you next
again
week.
next week. Bye bye.
Thanks,